Today, the Fed treads carefully. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and problem news with a distinctively Australian flavour. Well, the S&P 500 closed higher on Wednesday, as Federal Reserve Chairman Jerome Powell said that the Fed would, quote, tread carefully in the wake of the Russian-Ukraine conflict, easing investor fears about aggressive Fed monetary policy tightening ahead. Powell said the central bank will proceed carefully, emphasising the need to be nimble in responding to incoming data and the evolving outlook. And the Fed chief also noted he's inclined to back a quarter-point hike in March. That's in line with market expectations, and is open to a series of rate increases in 2022. It's worth pointing out the great stress he placed again on being data-driven and nimble. Whereas a few weeks ago, that might have meant a very dynamic approach to inflation, it is quite likely this now means keeping a close eye on the economic growth numbers, said Jeanette Geraghty, Managing Director at Robertson Stephens Wealth Management. In the light of the Chair's testimony and events so far this week, we retain our monetary policy outlook, which anticipates 5 25 basis point hikes to the policy rate in 2022, starting in March. And we continue to expect a plan for passive balance sheet normalisation to be announced in May and to be implemented in June, said Barclays economists led by Michael Gapon. Earlier on Wednesday, Fed Bank of St. Louis President James Bullard called for a rapid withdrawal of policy accommodation, while his Chicago counterpart Charles Evans said monetary policy is currently wrong-footed and needs to be upwardly adjusted towards neutrality. So as a result of all that, the S&P 500 rose 1.9%, the Dow Jones Industrial Average added 1.8%, and the Nasdaq Composite gained 1.6%. Powell said that it was still appropriate to raise interest rates by 25 basis points in March, but he didn't rule out the possibility of a 50 basis point hike at subsequent meetings if inflation continued to run hot. The US 2-year Treasury yield, which is sensitive to Fed rate changes, jumped more than 16%. The backdrop of rising US Treasury yields helped bank stocks pare some of their recent losses. For example, Signature Bank, Commercia, and SVB Financial all jumped more than 6%. And energy also racked up gains as US oil prices jumped to their highest level since 2011 after OPEC and its allies showed little incentive to curb the surge in oil prices, sticking with plans to increase production by 400,000 barrels per day in April, despite supply fears. The move from major oil producers to keep production steady comes just as US oil inventories fell by a more than expected 2.6 million barrels for the week ended February the 25th. The market appears to be increasingly pricing in an outage of Russian oil shipments. More and more Western oil companies are announcing their withdrawal from Russia, Commerzbank said in a note. Russia's invasion was denounced by the United Nations General Assembly, underscoring Moscow's increasing isolation on the global stage as US authorities weighed restrictions on Russian imports. The Russian military's advance continued, with the Kremlin saying it captured the Black Sea port of Kherson. And Ukraine said it will take part in a second round of talks with Moscow on Thursday. Sell-side analysts in the US are getting more nervous about earnings forecasts, with profit revisions turning most negative since May 2020. Downgrades are now outweighing upgrades as the war in Ukraine, rising oil prices, and policy tightening may weigh on economic growth. In US corporate news, Citigroup said profitability will fall as the bank pursues a strategy shift that will raise expenses in the near term. Tech stocks held firm, though, even as US Treasury yields climbed, with big tech and chip stocks leading to the upside. Big tech including Apple, Amazon, Microsoft, Alphabet, and Meta were all in the green. And Salesforce reported quarterly results that topped expectations and raised its full-year guidance, pointing to healthy demand for digital transformation. Its shares closed, though, less than 1% higher. We believe further margin expansion in 2023 and the continued integration of Slack for Salesforce will ultimately be key for the street looking forward, Wedbush said, as it raised its price target on the stock to $315 from $275. Nordstrom rallied more than 37% after reporting fourth quarter results that beat analyst expectations, and the department store retailer painted an upbeat picture about the year ahead. And in other news, Ford Motor Company outlined plans to split its auto business into an electric vehicle unit and legacy gas and diesel unit, with the latter expected to serve as a cash engine to fire the automotive's EV expansion. Its shares rose more than 8%. And on the economic front, labour market data showed that private payrolls in February grew by 475,000, beating estimates, which were set at 378,000. So you can see here that the Fed is tiptoeing along, trying to walk that tightrope between too much and too little in terms of quantitative tightening or quantitative easing. And they will be very data dependent. In other words, they'll wait and see what happens. So nothing is certain, but the markets, of course, continuing their volatile run, had an up day today, but will probably have a down day tomorrow. Who knows? Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.